Good morning, traders and investors. My name is Shen Mwangangi, your best market analyst here at HFM. So, yesterday we received the PPI readings and we had a cooler than expected reading, which provided a wave relief across global markets. This halted the US sharp rally and allowing equities and gold to rebound, and the focus now shifts squarely to the health of the American consumer, with critical rate sales data today that will offer fresh clues on Federal Reserve's potential policy path. So, if I'm to look on yesterday's moves, moving on to gold, the first one, yesterday before the PPI came out, which is focusing on the lab, which was focusing yesterday on the dollar. I was looking at gold and we had two levels, the 33.30 and the 33.35. So my expectation before that news was having a move down that 33.30 level. But when we had the data coming out slightly softer than expected, the dollar went down. We had that sharp spike down even below the 98.07, which was our previous support zone. And also gold, we had that move up all the way to the previous zone where we had a previous resistance zone at the 33.75.03. So the sharp drop in the US dollar and bond yields was a major tailwind for gold. So we had that rebound from the 33.20 level, all from the 33.30 level all the way to the 33.75, and reclaiming a short-term trend line also, and it ended the day positive, showing resilience after Tuesday's sell-off. The other pair that I was looking at was, let me move to the USD JPY. You have USD JPY. You can see this is the daily chart. So yesterday also, the previous day before yesterday, we had broken above a key resistance zone at the 148.353. But this strong, remember, sometimes fundamentals can go against technicals. And yesterday we had that move where we had the previous day we had that move where we broke above the 148.353 level with volume confirming. But yesterday during the retail sales, we were able the dollar, which came slightly weak, also impacted the USD JPY pair, and we moved down all the way to test our previous support zone at the 146.940. So the USD JPY pair pulled back from its recent breakouts, easing from near the 150.00 level as yield differentials narrowed. The pair settled back into a consolidation pattern after the volatile swings. And also, the other thing I was looking at was oil, the US oil. What affected the US oil was majorly the results that came out after the crude oil prices were released, and the oil market was caught in a tug of war. The bullish draw in crude inventories was offset by the bearish build in gasoline, which raised concerns about consumer fuel demand. As a result, West Texas Intermediate crude oil prices remained volatile and ended the session with little to clear direction hovering around. So that was it for yesterday's based on just fundamentals and a few of technicals. Now what is coming up today? Now today we shift now to the most critical data release of the day, which is the US retail sales for the month of June. A strong number will suggest that consumers they will remain resilient and potentially reignite the dollar strength and rate fears. A weak reading could stoke recession concerning a weighing on the dollar. And also we have the Netflix earnings, which is going to come out today, and it will have the reporting after the market close, and its performance will be a major guide for the tech sector on Friday. Also on Friday, July 18th, we have the University of Michigan Consumer Sentiment, which is a key report on how consumers feel about the economy, which will round out a week of important US economic data. So based on the market outlook right now, if I move to the first thing that we're going to look at is gold. And not forget, we have a competition known as the trade gold drive bold. And because of that, I will start analyzing gold. And the part of gold is highly now dependent on the retail sales data and the dollar's reaction. A weak sales could send the dollar lower and push gold towards the resistance zone around 33, sorry, around 33.17. Let me mark that. We have minor resistance zone around 33.21, which is around also the 33.17. If I move higher, we have that zone 33.21 if you have a weak dollar, and also we might break a strong dollar, and we might break around also the 321 level if the dollar continues to show some form of strength. And also a surprisingly strong number could reverse yesterday's gains. Also, on the forex pair, they use DJPY. Remove the DJPY. Uh, I know they use DJPY also will be influenced. Remember, the major influence for today is the retail sales. And not too hot, not too cold, which we called a Goldilocks, will uh, will si- might signal a recession for the US, and a sharp deviation in either direction will likely increase volatility. Remember, right now the US is the outlook of the US economy is either we are in a recession or not. And right now, what's influencing the Fed is, remember about the tariff cuts. If about the tariffs, there are some countries which have been given tariffs increase. That is we have like the Brazil and majorly the BRICS, who are trying to come up with their own currency. And also we have well the tariffs deadline, which was pushed from July 9th all the way to August 1st. Uh, the reason is because they haven't yet come to an agreement, and also the Fed are trying to not cut the interest rates or hike the interest rates, just because the effect of the tariff felt uh, hasn't yet reached the consumers. So we're going to look at what is going to be the impact for the retail sales, and I was just touching a brief on how the dollar might be affected based on retail sales, and also some bit of tariff news. And also coming on to the US indices, the equity market are now looking for a Goldilocks number. Remember, Goldilocks is not too hot, not too cold. Number from the retail sales, and not too not too hot to spook the Fed, and not too cold to signal a recession. A sharp deviation in either direction will likely increase volatility, and Netflix results also will dictate the Nasdaq direction on Friday. And lastly, for oil, for oil prices will be influenced by the perception of the economy health derived from the retail sales data. And also, strong consumer spending implies robust economic activity and higher energy demand, which will be supportive for prices. Remember, oil is majorly influenced by supply and demand, and also OPEC plus decision. So right now, you're only looking at the supply and demand based on the retail sales also that is going to be released today. German DAX, we move to German DAX. Nice. So right now at the German 40, we are below our previous support zone at the 24,462.78. And the Germany index will also likely to follow the lead of the US markets following the retail sales report. And a positive reaction on Wall Street will likely translate into further gains for the DAX. Right now, the levels that we're looking at is the 462.78 for our daily levels, and also the 23,377.30 still for the daily levels. If I'm going to check the point of control where we have many orders, that will be that level at the 23,738.15. That can be a key place to retest or make the decisions based on the retail sales. But remember, we only make decisions after we have received data information. So we only trade after the news, not during the news. So I can see we have a question. What do you think of PPI? What do you think of producer price index? So yes, we had PPI yesterday and the reading was cooler than expected. And yesterday, it provided a wave of relief across global markets. And because of this, it halted the US dollar's sharp rally and allowing equities and gold to rebound, as I said when we started the conversation earlier, when we when we started the conversation earlier. And right now, the shifts now is not on PPI. The shift now is on the retail, American retail sales. And this is critical. It's a critical data, and it will offer fresh clues on the Federal Reserve potential policy path. Yes. So we have looked on our US dollar. We have looked on our German 40, at our US 500, US 100. We have also looked at the oil, and also we have looked on our gold pair. So have a look out on our threads that is going to come out in the next 15 minutes. If you'd like to view our threads, kindly go to HFM Kenya. That is HFM Kenya on our X page, formerly known as Twitter, and you will see the threads also for our East African page, HFM East Africa. And you will see the threads on the market outlook for today. That said, I'd like to notify everyone that we have our classes, our physical classes beginning at 11, ending at 12:30, and our online classes beginning at 4 p.m., ending at 5 p.m. That's it. Thank you for joining and see you tomorrow, same time, same place. Goodbye.